Welcome to our daily Forex market analysis, and this is for trading on July the 2nd, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. Right now, especially right now with the market being so volatile, it is very important for us to be careful. As usual, we'll start off by taking a look at our calendar here. Before we continue on, some things that are going on in the market right now. Today, we saw that U.S. House has they have approved $1.5 trillion worth of infrastructure bill. And now this was, we did hear Powell earlier in the week mention that they were going to pass a stimulus bill, and the last time there was some talk about it, it was supposed to be $1 trillion, but this is bigger than that, $1.5 trillion. So that is positive for the stock market. Now, they're also giving more money to small businesses and so forth, which is also good. And in terms of the virus cases, we have seen an increase in the US. And from what I see, there is an increase there is a change in certain states that we are seeing. So California is not opening up indoor dining, and they are actually delaying the opening of stuff. And that is also the case with New York. So both of these places are actually not going to continue on with the opening up of the economy as the plan was, because of the number of cases that are increasing. So we'll have to keep an eye on that and see how that plays out. For now, though, that has not deterred the market, so we are back into the risk on for our markets. And in terms of the FOMC meeting minutes, there wasn't much that was different than what had been said and done before. Coming up here, we have monetary base for Japan. And trade balance numbers here. Again, market is ignoring any kind of numbers that come in below expectations. So this morning we saw that ADP job numbers came in a fair bit below expectations by, so we're looking at 2.8 million here. They came in at 2.3. So that was quite a bit of a difference, but market completely ignore that, and they did jump on the positive data that came in here. So right now, I think that will continue. Coming up here on Thursday here, big day for US dollar, or generally we see the non-farm payroll numbers are market moving. So we will keep an eye on that. This is in the first thing in the morning for New York session. And then other than that, there's other data, but is not as important. So right now, main focus will be on the non-farm payroll. Right now, we are looking at an addition of over 3 million jobs. Now, with the ADP showing slightly below expectations, we may get this one below expectation as well. I would, if there is positive, if for some reason we see more jobs being created or people going back to work, that will be really good for stock market. We can expect stock market to take off as a result of that. But I'm not sure if it will actually drop if it comes in below expectations. So we'll have to keep a close eye on the stock market. Right now, the Forex markets are essentially being led by the stock market. So when we see a risk-on scenario in the stock market, when the stock market starts to go up, we see US dollar drop, and we generally see yen drop. So yen crosses go up, dollar crosses go up, and that's the relationship we are seeing. So if the ADP for non-farm payroll numbers come in positive, then I would expect the stock market to go up, and thereby US dollar to drop. So we'll have to keep an eye on that relationship. So let's go on to our charts now. We'll start off with euro dollar. Euro dollar, it's still trading in this range. It's been trading in this range for some time now. And in this case, over the last few days, 4 or 5 days, essentially, it's been sitting in here. So yesterday we had an indecision candle. Today we have a slightly longer indecision candle here. So in this case, basically, I am neutral on this and expecting it to go sideways. And I think we had talked about this one before, where sometimes what they do is they will hold one versus the other. So generally, euro and pound tend to move in the same direction, but sometimes we see that they will hold one and move the other one. So last week they were dropping, the US dollar was dropping. This week it's going up, and we are seeing euro basically maintain its position. So this is neutral for now, but I have left a couple of other support resistance levels in here in case it does break. If it breaks to the upside, I will look for further move higher. Breaks through the support, then I'm going to look for move to the downside. For now though, we may just be stuck in this range. So neutral for euro dollar. Pound dollar here, this one has been bullish. Yesterday we were looking for a move higher. That happened, and now bias is still bullish here. I will look for a pullback potentially into this 1.2430 level, and then a further move higher here. So bullish bias here for pound dollar, and target here is 1.2540. So this is bullish. Aussie dollar here, Aussie dollar has also been trading in a range. We did see a bit of a move higher here. The candle close for today is neutral though. As we can see, there are pins in both directions. Now it has made higher high and higher low, so we may see a further move to the upside. And first target would be the high of today's candle, which is 0.6950, and then second target would be 0.6980 back into the top here. So as we can see, essentially this one has also been range bound. Overall, this is where price has been stuck for a couple of weeks here. Right now, I'm looking for price to go up slightly, and then it may come back into the range. So neutral to slightly bullish here for Aussie dollar. New Zealand dollar, this one as well, there is some bullishness in it, but it's not extremely bullish. Now it has been making its way up there. Now first target here is 0.6510 and then 0.6530. So slightly bullish bias here, bullish to neutral here as well. Not showing a strong move up, so we may get something like this, or it may go higher, and we may just still be stuck in a range here. So neutral to slightly bullish bias for New Zealand dollar. Dollar CAD here today, we see that price struggled. We have not we have not seen this one drop through that support level. So in this case, what I'm looking for is something like this. So we'll see if price is able to hold above 1.3550. If it holds above this level, we are likely to see price go back up. So let's take a look at the 1 hour real quick. We see that it's just been stuck in this sideways range. Now we do have this big drop here, inefficient move that could get filled. So if we see price go through our resistance level, so we could see one of these moves here. So watch out for resistance level at 1.3600. If it holds below, then we're looking for another move to the downside. So for now, I'm neutral on this. We just need to see where it wants to break. So I'm going to keep an eye on both the high and the low for today, and whichever direction it breaks out of that is the direction to look at in terms of the move. So I'm just going to leave it right here. We have two more support resistance levels in both directions here. So neutral bias here for dollar CAD. Silver here. Silver dropped today. Let's take a quick peek at 1 hour. As we can see, this is where it's consolidating. And in terms of our direction here, so we do have a bearish candle close. So I'm going to say bearish bias here. However, keep in mind, we are into important support resistance level here. price has struggled with this area quite a bit. So at this point, I would say bearish bias, but if it does not break through the support, we could see things turn around here as well. But once it breaks through here, then we are back again. But for now, bias is bearish with caution though. Gold here, gold looking slightly bearish here as well. I would take a look at the bottom though. If it holds above the support level here, then we could see it go back up. So watch out for this support resistance level at 1759-ish level. So right now, the pin in the bottom shows that price is rejecting the support level, so it could go back up. So right now, neutral to slightly bearish bias here. As long as it holds above 1759, we're likely to see a move higher. But because there's so much stuff going on, if we see a sudden drop in equities, it could cause gold to drop as well. So that's something to bear in mind. Gold is gold tends to move with the markets, with the stock market as well. So keep an eye on this. If it breaks through the support of 1759, then we're likely to see it go all the way into this. This is a big support resistance level, and then we may see it go higher. So for now, bias is neutral to bearish for gold. Oil here, oil is stuck in a range as well for last 2 days. It hasn't really done much because it has failed to go through the resistance. I would say chances are it's likely to drop. 37.20 would be the target level here. So looking for price to come back down for oil. So bearish bias here for oil. Copper here, copper has been going up. And now we see that copper is into this strong support resistance level. And over the last little while here, it has gone up considerably. So bias is still bullish, just like yesterday, but I would be cautious here. If it doesn't go through to the other side, highly likely that this will drop. But if it breaks through, then there is definitely more room all the way into the high. So for now, bias is bullish, but with caution. Oh, next target, 2.75. Bitcoin here, Bitcoin still holding sideways here. We have a small bullish candle close. Next target here is 9,300, and only if it breaks through that, then 95. But it's still stuck in this narrow range that it's been trading in over the last 5 days here. So it could also do one of these and just stay range bound. So I would say for this one, neutral bias for the time being, and only if it goes through 9,300, then we could see 9,500, but otherwise this one is sideways as well. Okay, S&P 500 here, this one also stuck in a range, as we can see, between these levels here, 2990-ish level to 3160 level here. So this is where it has been stuck. Now, today's candle close, we do have some bullishness in here, so this one may move higher. Do watch out for today's high though. If it doesn't go through, it can again turn around. But bullish to neutral bias here. First target is 3130, then 3160 here for S&P 500. So bullish to neutral. Nasdaq though has done well. We are into all-time highs again. And should it go through, we are looking at 10,450. So there's bullish bias for Nasdaq as well. Dow Jones here, this one hasn't quite done as well. This one we see price did go up, and now we have a neutral close. Yesterday was a neutral close. So neutral bias with this one. And as we have seen with some of the other crosses, if price holds here below the high, we could see a drop. So neutral bias for Dow Jones, not looking quite as strong as Nasdaq. DAX here, DAX is looking neutral. We did see that price pushed higher. It dropped initially and then it has gone back up. So we may see a move towards the top of the range here as well. In this case, we have 12,480, and this is the range it's been trading in. So I'm looking for it to go into 12,480, and only if it goes through that, then next target would be 12,600. So for now, bullish to neutral for DAX. FTSE here, FTSE is neutral. Today's candle close was completely neutral. It is still holding in this range that it's been trading in for the last several days here. So neutral bias, I will look for a retest of the support if it holds above, basically sideways move again. Neutral bias here for FTSE. And Nikkei here, Nikkei hasn't made much progress. It is slowly making its way down. So it does have a bit of a bearish bias to it. So neutral to bearish is what I'm looking for. Looking for a retest of the low at 22,000. And if it holds above, we are back into this range again. So neutral to slightly bearish bias here for Nikkei. So that's it for today.